Hey, what's up everyone? Starting off with a little bit of a different tune for tonight. We are coming to you on Wednesday night with prep analysis for Thursday, September 15th, 2022. Hopefully everybody was able to get out a good day today. It's a little bit more consolidation and trying to figure out what we're going to do. Definitely some nice range if you're trading the indices. You had to be super patient today to catch those entries at the lows and be able to take reversals at the highs. I think it was like what was that, like 39.30s, 40, something like that, and then up to like 39.80s. I think it was even twice today he had those opportunities. And CL crude had some definitely nice ops in my eyes if you were prepared for those bigger zones and so forth. As the usual reminder for everybody, we are not financial analysts. We are not financial advisors. Nobody in their right mind should be telling you what to buy and sell. Like, you need to help form your own opinion, because anybody that's pushing you crap is, in my humble opinion, pushing you crap. So yes, you can hear what they have to say, but form your opinion on your analysis, because what's right for somebody isn't necessarily what's right for you. And yes, that is my 2 cents, my humble opinion. I'm sure there are people that are amazing at giving buy and sell, but that is not what we are here to do. We are here to highlight and find for you some interesting zones, try to remove the noise to help you find stuff that you want to take action on for your style, for your opportunities, and for your risk appetite. And with that, we will get into things for Thursday. We're going to start off with XBI. XBI is the biotech ETF. It actually has a pretty good size impact if you watch the Russell 2000 futures RTY. It has a pretty good impact on that, as well as some of the financials like KRE, KBWB, and MDY. But in any event, I mean, XBI's got a nice kind of interesting level tomorrow. There's a handful of pieces of evidence in there, including, but not limited to, the 20-day EMA and then the high daily anchored VWAP. What's interesting to me as we looked through this one, I mean, it's kind of right there. I mean, it's right smack dab in the middle, actually, the 20. You don't hold that. Like, if we're trying to shoot through and clear that, I mean, there's a nice kind of, another piece of zone evidence up here at the highs, and kind of where we were dancing around and going back and forth. You can see there's some decent wicks in there, right where this 200-day SMA is, and then this other indicator that we've been working on. These are tracking different pieces. That's why I got 3 different colors in here. We're trying to further tune and refine that indicator based upon some different inputs that we can provide to it. But they've actually been proving pretty useful just in terms of seeing actually hitting this one, stalling out for a while, and then coming up and hitting the yellows, or vice versa. So in any event, that's a little bit more detail we need to go into for tonight. The next one, where we mute our radio telling us about what's going on in the markets, is SDOW. And SDOW has got kind of a nice zone in there. It's up towards the highs, kind of where we were at for today. And I mean, it's just kind of basic in my mind. There's not a whole lot with a lot of these. You can see it's at that 35.30 to 35.01 spot. There's nothing really above for a while, so if you're wrong, you're wrong. Going up to where you've got ADRs, a gap fill, which is again that thin yellow dashed line, and then the bottom edge of a supply and demand. If we were to even clear that, which, I mean, it's entirely possible, and you'd have some room on the ADRs, which takes you up into this higher level zone, which is again another end of gap fills, and that'd be taking us into symmetrical extremes as well. Speaking of symmetrical extremes, I think we actually reset here a little bit as we flip over to ERX and a couple of the other ones that fill in with the energies and whatnot here in this space. So first up was ERX, and ERX had a nice zone here at the lows at that, where is it, 57.36 to 57.16 level. What was super interesting too, as a glance through this one, is just below that there is the rest of the ADRs, as well as the swing A VWAP, daily anchored VWAP, and the 20-day exponential moving average. Again, if you don't remember the swing AV WAP, when we say that, it's just an anchored VWAP that's attached to, say, a 5-minute or 30-minute bar. And so in this case, you can see I've got my candles configured for 30 minutes, and that's where it puts it right in the middle of that zone. So pretty interesting one there. Showing in talking to some folks, I mean, potentially we're setting up to do some kind of a play like this in an ABCD type of pattern, where AB equals CD. Typically, you're looking for about a 50% retracement, and ideally you want to see this end in some kind of evidence. Maybe there's a gap fill or something else up there. It looks like, yep, sure enough, there's a gap fill up in that area, and that is kind of an outside edge of where things might end. That would be a kind of like a third tier standard deviation if we rocketed it all the way up there. But again, nothing is buy or sell recommendations in this group. Moving on next, actually, we'll flip off of that subtle note to Gush. And Gush has two zones in there. One little smaller zone in terms of what and how we look at and kind of the evidence that's collected in it. And then the bigger zone in terms of what and of the evidence and so forth collected has got that 20-day EMA in it with the photo ADRs. And you see there's also kind of a potential ABCD on that one there. So that's the one, and just above it actually here is another where you could potentially be working to set a higher low here, come down, grab some of the pieces of evidence in here, and then go continue on with that. Really have to see what and how CL's trading. Don't have it active at the moment. Give me 1 second. It looks like it's kind of flat since we closed a few hours ago. Down a little bit, but nothing of significance in my mind, at least. Moving next up, we will hit the SQQQ, which is the inverse of the Q. So Q's are going down, SQQQ's going up. Q's going up, T triple Q will be going up. The bigger zone for the S triple Qs is actually at the highs, right where the highs were today. And you can see it had a hard time kind of getting above and clearing. You can even see some of these wicks back here if you're looking left earlier this month about where and how they're interacting. And we actually have a weekly anchored VWAP back here, which is probably going to be coming from this area over here. If this is daily, then that would be lining up with the weekly there. So nice little review on that one. We will hit on Tesla and then USO to see what we've got in there. Tesla's zone is here tomorrow at the 295.37 to 293.42, and it is right at kind of the beginning formations of what looks like a supply and demand if you look over on the daily chart there on the left. And so that's kind of a nice one. Again, could be the potential to be setting up some kind of a higher low. Maybe we even do something like this, which would be pretty interesting. That's far from a 20% retrace, but man, Tesla's always got seemingly a mind of its own. That looks invalid to me after looking at that, drawing it out in real time. So benefit, you get to see some real-time analysis, not just all pre-scripted and recorded. I will look and talk and tell you what I see and don't see. Next on the list is USO, again keeping with that kind of energy theme, oil, etc. USO did have that same kind of ABCD treatment that I was looking at before on ERCs and Gush, and USO's zone in here was at that 75 to 74.74 level. So right here, kind of get these highs in the middle of a supply and demand that I've got over here, actually just on the 30-minute, and trying to watch some of those pieces there. And this would be getting into a little bit of the extremes, because today was a bit more muted in terms of the ADRs. And so, I mean, this is above, depending upon where we open. If we open kind of flat right here, I mean, these are the full and photo ADRs. So this would be above kind of what the last 20-day average or 10-day average, etc., have been on these ADRs. With that, we'll take a quick second here. We're going to go ahead and flip over and pull up to see some of the overall breadth prep items. see what they map out to be and if there's anything of significant interest in there. First up on that list is Phillips 66. And Phillips 66 actually had 2 zones on there, both actually pretty high scoring zones from the analysis that we looked at, and they just happen to both be at the highs, which is kind of interesting when you think back and look over to those other charts we had just a minute ago. In particular, the one that I remember looking at this a little bit ago that I found kind of interesting was you've got the 20-day EMA and 50-day EMA right at this first zone here, and then you've got a daily anchored VWAP in there as well. So that's pretty interesting. And then the other zone that's in here as well is up just a little bit higher. It's actually the higher scoring zone with a number of pieces of evidence in there, including full ADRs. Again, I know these are full ADRs because of the fact that the algorithm is coloring it blue. That's just the color that we've been using, and kind of what we learned from some other folks that we've been spending time with is just that's colored. We could have picked pink, we could have picked orange, we could have picked any other one, but that's the one that we've used and how it's been structured so far. So that is that particular zone there. This would be the first one to watch, and you kind of know if you're wrong here in kind of the way this indicator is looking at the moment. If this thing is wrong, then I'd expect we're going to come up here and tag this zone. It doesn't always happen. We're still kind of refining and building this one up, but again, it's been proving pretty useful and pretty interesting. Next up on the list was Palo Alto Network. Actually, no, I'm sorry, PANW was on the list, but had to account for the stock split. And after accounting for the stock split, it didn't qualify for the RoyalFlush zone. So again, a good point of why we have these things in place, so we can go through and filter out the noise, so we don't look at things that just don't have really good kind of setups for us. I mean, it's trying to find those pocket aces or those other really great hands that are A+ type of setups. And so in any event, the T-Mobile US has the 2 zones in it for tomorrow. One's the higher scoring zone, which is up at that 142.16, which is this one here. So I mean, this is really the higher scoring zone. The other one's down at the lows, the 138. I mean, it's there, just it's not as big of a scoring zone really. In most days, it'd probably even get knocked out and not get considered. It's that low on the score. So it's there, it's interesting. It's got a number of pieces of evidence in there, but they're lower in terms of quality. So interesting setup on that one. We'll hit on Ross real quick, and I will mention Fudge. I just realized it didn't change the monitors, folks. That really stinks. I'll go back and hit those ones here in a minute, and total apologies. My bad on that. Thought we switched. But we'll talk about Ross. Hey, while I think about the Ross one, I did want to mention, I noticed this in one of my other chats here a second ago. There's a lot of econ news tomorrow in the morning. You've got retail sales right first thing at 8:30. You've got initial jobless claims, Philadelphia Fed business outlook, import price index. And so you got a lot of different pieces, which could make this Ross Stores one pretty interesting too. Its bigger zone is down here at the lows with that 50-day MA. You've got gap fill in there. This would be where the ADRs would be depending upon where we open, because again, we track ADRs based upon open to where we close. And so if you open all the way down here, well then ADRs are going to be pushed down even further below south as it were. So in any event, again, sorry about that before, but the Ross bigger zone is down here at the lows at the 86.77 to 86.63 level. I'm going to flip back to the Phillips 66 since I totally borked that one. Need a little reminder to smack me in the face when I don't have that. So the Phillips 66, as I was mentioning, had the 2 zones that you obviously couldn't see. And the other part actually I'll mention, since you couldn't see it, is there's this little setup forming here. I'm not even sure what the hell to call that, honestly. My mind's getting pretty tired. But kind of a triangle. It's got to make a decision here soon. It's getting pretty tight, as some folks would say. And so it's got two zones in there. The bigger zone is up at the highs at that 90.45 to 89.95. So nice kind of compact zone there. And then the other one, like I was saying, you have the 20-day and 50-day EMA combined into this one. And it's got the indicator that we've been working on. And this is what I was noting before, is you could do something where you come in and kind of play around and tag this. But if we go through and shoot through, like, I'm not going to try anything in here. I will wait to see that we come up into this bigger area. And you know what? If we don't get it Thursday, I am totally fine with that. Nothing says you have to take it. A lot of these I don't even have time to take and grab. We do reduce a lot of these 400 plus tickers down to 50 or 60 kind of very, very higher scoring RoyalFlush zones. That doesn't mean you're trading all of them or taking all of them, because there's other things like life and other kind of commitments that folks may have. So in any event, I'd be watching for this zone up here if we did decide to blow through and take out that one. And then I skipped over T-Mus because I was a fool not watching that I wasn't on the right screen. How are we in time? 16. So T-Mus had two zones, like I was saying. The bigger zone was up to 142.16 to 141.63. And you can see on that one, right, that to me is interesting, because it's had some tough time trying to get above there today. It wicked there a couple times. It just fell right through, tried to get back above, and just really couldn't get in there. And then the lower scoring one was down here at the lows. I wouldn't worry as much about that one. It's there, but and it's got a number of pieces of evidence. It's just not. It's not that high on my list, to be frank. Twitter, however, had a pretty nice zone on it, and was noticing when I was walking through these a few minutes ago that this one also has that kind of ABCD, potential. Not saying it will, not saying that we'll see any of this, but that's kind of an interesting one. It's trying to, if I look through this set of indicators and stuff in here, so green is kind of been my 10-day, the 20 is the white, the black is 50, and then the blue is 200 SMA. So you can see we're trying to do the crossovers and stuff in there. We're trying to clear this start of a supply and demand creation area. So maybe we can get lucky and we can come down and tag this 50-day EMA, daily anchor VWAP. We can tag this zone, which is the RoyalFlush one for Twitter tomorrow. Maybe we can tag this. Maybe something else happens with the merger news. Who knows? And maybe we set up for that kind of bigger play up here. We could also be setting up for something complete inverse. All right, we could be setting up to do potentially something like this as well. And tomorrow, we come back up a little bit, and then we trade back down to this area and try to attack that trend line from way back there that we dipped just a little bit below the other week. So again, staying open, being prepared for whatever the market may throw at us. We'll hit on Pepsi here to close things off. More so because it's got an interesting zone in there with, again, a number of pieces of evidence. But also because it had it, like I said, almost $6 range yesterday, and today is kind of the epitome of we just didn't trade as much today in comparison. And so its bigger zone is going to be up here at the highs. We tried to attack into it once today. This probably would correspond, my guess, timing wise, about that 40 or 39.80 as it were on the S&P. So nice kind of zone there for Pepsi at the highs. Again, 169.51 to 169.15. All right, folks, we will call it there. Again, my apologies for going through some of that stuff and not having it on the screen. We are continuing to improve and do better. If you have comments, thoughts, ideas, something you want to see us highlight or talk about as it relates to Ninja or pulling up and showing things for the futures or for some other ones, go ahead and throw them in there, and we will take a look and see kind of what the algorithm spits back out, or just kind of what we see on the screen. Hope everybody has a good one, and we will catch you tomorrow night. Bye. Bye now.